Good evening, ladies and gentlemen. Today is June 12th, 2019. My name is Kenshin, and this is today's market wrap-up. For the first piece of news today, the Los Angeles-based producer of plant-based meat substitutes, Beyond Meat Incorporation, was reprieved of downgrades after Tim Hortons announced the offering of the fall meat breakfast sandwiches at almost 4,000 locations in Canada. The company's gained as much as 13% after Tim Hortons announced it added 3 breakfast sandwiches to the menu with Beyond Meat sausages after having tested them at various locations last month. Beyond Meat had also reported recent quarterly earnings last week for the first time since the IPO. They have also estimated that the sales would exceed $210 million in US this year and a break-even EBITDA. The results of reported earnings and estimates reinforce the fact that the consumer demand for alternative meat products are on the rise. The main focus now is if the supply can increase fast enough to meet the increased demand. And the Beyond Meat's share was up 13.1% to $142 today and up 46% since the earnings report on June 6th. For the second piece of news today, following the effects of Trump's tariff, Walmart, the largest retailer who sells billions of dollars of Chinese-made goods, had adopted a new cost-tracking tool. This cost-change scenario tool was introduced a year ago and now has been spreading throughout different product categories to let suppliers submit cost increases directly attributable to higher U.S. tariffs. The implications of this tool suggest that there can be an increase in price of items that are directly related to the tariffs implemented since suppliers are raising the cost of the product. Walmart has the option to absorb the increased cost and take a hit to profit, or pass it along to consumers, which would affect sales. An analyst at Evercore ISI estimated if the latest tranche of 25% tariffs is instituted, it can cause price increase in all retailers and cause growth of profit to deteriorate. As for our final piece of news, a case for Federal Reserve to cut interest rates rises as CPI rose below expectations of 2% from prior year. Below forecast inflation follows a sign of slower economic growth in U.S. that would only reinforce investors' expectation for Fed's rate cuts this year for an expansionary monetary policy. The low inflation rate is mainly due to lower gas prices. The energy price fell 0.6% from the prior month and 0.5% from the prior year. In addition, apparel prices were unchanged after 2 steep declines. Trump has also maintained public pressure of interest rate cuts while also raising tariffs on Chinese goods. Although the impact of tariffs may not arise until imports reach final destinations and filter through consumer prices, Fed officials are meeting June 8th to discuss. Now let's see what happens with the market today. The North American markets posted moderate losses with the Nasdaq and S&P down 0.37% and 0.21%, while TSX exhibited little to no change. As for the European markets, experienced overall plunge with FTSE and DAX being down 0.42% and 0.33%. Moving on to Asian markets, the Hang Seng Index fell roughly down 1.73% respectively, while the ASX and Nikkei also showing a moderate dip of 0.04% and 0.35%. In terms of currencies, the Canadian dollar had gone down by 0.02% compared to the US dollar, virtually neutral 0% to the Canadian dollar against euro, and up 0.08% compared to Japanese currency. For the commodities, both index is indicating little to no change, with WTI being up 0.02% while Brent staying neutral. Gold and copper post moderate gains at 0.14% and 0.38% respectively. That is all for today's market wrap-up. Thank you for listening.